Hey everyone! The last couple weeks have delivered some of the most significant financial market volatility on record. When the Liberation Day tariffs were announced, the stock market cratered. Then last week, most countries except China got a 90-day reprieve, with tariffs being set to 10% for now. At the same time, the 10-year Treasury fell from about 4.2% on April 2nd to below 4% on April 4th. Then they climbed to 4.4% by April 9th. Treasury rates are also extremely volatile. This week, I'll share some insights on how I think this volatility could shape commercial real estate investment. But first, I want to remind everyone to join our upcoming live webcast on April 21st, when we'll be joined by Mark Zandi, the chief economist from Moody's, who will share his insights on how trade policy is shaping the economic outlook. Jeff DeBoer with the Real Estate Roundtable will also be on the webcast to offer insights on the federal budget and the commercial real estate tax policy outlook. So hopefully you'll join us for that event. The insights offered by these two experts should be exceptionally valuable in this time of uncertainty and investment volatility. So while it looks like the global trade war has tempered somewhat, I do want to point out that the average effective tariff rate consumers face is now 27%, the highest since 1903. And that's only a slight change from where we were before the April 9th policy revisions. Remember that tariffs on China, the US's second biggest source of imports, have surged from 20% to 54% to 104% to 125% and last week 145%. Who knows what they'll be next week? We also have 25% tariffs on auto, steel, and aluminum, while it looks like the tariff on Canadian softwood lumber will be about 34%. So while yes, the 90-day reprieve on tariffs is likely better than where we were prior to April 9th, we're still a long ways from the 2.5% effective tariff rate we were at a month ago. And I'm going to guess here, but I don't think the tariff policy is locked in. I think the policies could change with little notice at any time this year. They're probably going to be very fluid, which suggests that businesses, consumers, investors, and pretty much everyone around the world will be dealing with elevated uncertainty for a prolonged period. And making decisions is much more difficult when uncertainty is elevated. Now, here are some things to think about. For investors, riding the stock market roller coaster might not be very appealing. And the recent volatility in the bond market really isn't much better. In addition, the rising risk of recession and the prospect of higher inflation may cause investors to stop and think for a minute. Where can they invest their capital? What investment class has relatively low volatility? What investment offers recession resistance? What investment has some level of inflation resistance? Real estate. Of course, the real estate sector will face some headwinds in 2025 as well. But if U.S. trade and economic policies prove to be as fluid and unpredictable as they have been in the last 12 weeks, real estate may prove to be one of the most durable and stable investment options. Based on our preliminary look at first quarter data, it appears that apartment vacancy rates fell by about 10 basis points in the first quarter, despite still elevated completions. It looks like office vacancy rates also declined by about 10 basis points. Retail vacancy rates look like they held firm, while industrial vacancy rates may have risen by about 10 basis points. I'm still waiting for the final hard numbers for the first quarter, but it looks like commercial real estate is entering this cycle of uncertainty with structurally sound footing. At the same time, interest rate volatility could open unique financing opportunities, but investors will need to be in position and ready to pull the trigger on short notice to fully capitalize on narrow windows of opportunity should Treasury rates fall again. The other thing investors need to remember is that tax provisions favoring real estate are still in the works. The renewal of many facets of the 2017 Tax Cuts and Jobs Act are still in process, and if they're passed, commercial real estate investors could benefit. So in this climate of uncertainty and volatility, commercial real estate may emerge as the favored investment option, especially for investors who keep their eyes on the horizon.